Hey folks, Dan Frio, the Mortgage Update. Today is July 30th, and it's an early post, but there's a reason for this. I wanted to get out information about the Fed, what's going on with mortgage rates. We had a lot of news out today, and that's why I wanted to get to this, to just give everybody updates, where rates are heading, and some of the Fed information that came out that I just want to make sure you get the right, I'll say, unbiased view of kind of everything that's going on, because it depends on what side of the fence you watch. If you watch the right-wing media or left-wing media, you know, the world's coming to an end, or the world is fantastic and everything's going to be peachy. I'm in the middle, and that's where 99.9% of us are, I feel. And so I want to get the whole basis of my channel was always to just give you guys the truth. Unbiased, pull the curtain back, answer any questions you have. I got nothing to hide. So that being said, let's get to it. Headlines today is the GDP. What is that? That basically tells us how robust the economy is going. Gross domestic products, how much goods and services are being created. It was the worst ever. Minus 32. Okay. That is causing major hiccups in the markets, especially the stock market. So let's see what's happening in the U.S. markets right now. You're going to see the Dow is down 332 points. That's 1.25%. And we're basically down all across the board. VIX is a kind of a measurement of volatility, and there's a lot of volatility right now. So that's basically what's going on in the stock market. Let's go to the CNBC, the real estate. Let's see if there's any new posts here that we don't know about. I'm doing this live. I have other data to tell you, but I just want to see if there's anything popping up that might be interesting. Personal finance, complete guide to managing your money. No, Trump, it's CNBC, so take it with a grain of salt about the Trump news. Mortgage rates hit an all-time low. That was last Friday, so take that with a grain of salt. So let's get on. What's happening today in the MBS markets? And the MBS markets right now are up 14. Okay, we're breaking above. Let's focus over here. These are Fibonacci levels that we study every day, and there's two ceilings that we keep. We're kind of teetering between. This is the floor of a Fibonacci level, and this is the ceilings. We hit again. For those that follow me, we hit here. We hit that ceiling with resistance. We hit here, hit it and had resistance. Hit it here, had resistance. Hit it here. Basically, we had resistance yesterday, and we broke through it, and we're hitting the second tier of resistance. Basically, what the Fed's doing is they're coming in saying we're going to do anything and everything we need to keep the economy in the best shape that possibly can be. So if for those that I've been working with, we locked you right in here, and we've been okay since then. Rates have exceeded this, or they might go down a little bit. My assumption is most lenders are not repricing, meaning what I'm saying is most lenders are at their bottom tier on rates, and they're really not going to move unless there is a major move, because they don't, I'll just say it, they don't have to. Rates are so low that they don't really have to publish any lower rates at this time. Also, a fear factor is here's the moving averages. So if you blend all this data and you average everything out, you come up with four different criterias here: 25-day, 50, 100-day, and 200-day moving average. That's what DMA means. We should actually be in the realm, if you blend all this together, we should probably be down in this range right here. We might hit, because we hit this ceiling, and every time it seems like we hit the ceiling, we have resistance. We have a trend that could possibly move us all the way down here. So what I'm monitoring is possibly locking a good amount of clients right here, because this rate I have right now is the same that I had when I locked in everybody about a week and a half ago. They haven't really gone down any. So if you're locked in, you're good. Rates aren't any better than where they were right here. But the fear is any little hiccup is going to send us plummeting back down to these averages, which we truly, in a technical piece or review, this is kind of where we should be. We're not in normal markets. Again, what's happening? Let me recap what I'm showing here. I follow on this channel this number right here. This is what we call mortgage-backed securities. This is a bond that trades. You'll see that, and I'm live right now. This is Thursday morning, Thursday the 30th. At 10:35 Central Standard Time. You're going to see this move as we're watching. I watch this all day long. This is basically my ticker. And I want to monitor this. Why? Because this is actually the instrument or the vehicle that creates mortgage rates. As this number goes up, the price of a bond, rates come down. So green is good. The higher the green number is, the lower rates are going. Unfortunately, we are so low in rates that most banks aren't really doing anything. They're like, we're low enough. Volume is so robust right now. We don't really need to lower rates because we're at capacity anyways. So if we're working on your loan, I apologize. It usually takes us 3 weeks to get you completed. The average right now is about 5, and I'm not deterring you to call us. We still have probably the best rates in the country, as well as fees. But it might take us a little bit of time. Don't fret because, the rates that I promised you when I initially talked to you, I'll get those rates for you or better. But, this is what we watch, and, we're at full capacity, and we have a lot of people working out of their homes. So we're doing everything we can. Basically, it's mandatory people work on the weekends to stay caught up. But that being said, we watch this number here. Because this is, again, the instrument that creates mortgage rates. That, along with profit margins and hedge money and everything else, that's how mortgage rates are determined. All right, so that is those numbers. The information I want to come out with is I'm going to give you some economic calendars, what came out today, and then some Fed news. So today we had a lot of information in regards to the gross domestic product and jobless claims. So let's say initial jobless claims were up, actually down from what the consensus was, but it was up from where we were last month. Okay, so we were 1,422 last month, and we're at 1,434 this month, and that's 1.4 million, 1.434 million, and so forth. So we have more initial claims than we had in previous month. Continued jobless claims also took a big pop. Previous was 16,151,000. Now we're at 17 million. Okay, so that also took a pretty substantial jump. GDP is in a basically terrible, and that's how the production of companies in the U.S. Tomorrow we're coming out with personal income and other things of that sort. The focus that we focus on here is inflation. That's one of the numbers that's going to be coming out soon. And the expectations is to be about at 0.8 to 1%. The Fed, their target rate is 2. So here, let me explain what inflation does. When the Federal Reserve monitors inflation dramatically, because they don't want to overheat the economy and have inflation go out of control. Inflation drives up the prices of everything. So money's cheaper, so people are going out there and buying more and more and more stuff, driving up the prices. So the Federal Reserve, that's one of the criterias or the studies that they follow or the numbers they follow to make sure that the economy's money isn't that cheap that's making the economy boom that much more and driving up prices. Their target rate, like I said, is 2%. Our expectations are that number to come out between 0.8 and 1. So the inflation index that they're following is way in control. So that means that they have room to move to even make money cheaper. So hopefully that makes sense to you. So that being said, the Fed came out basically yesterday and said, we're going to do everything and anything we need to do to make to keep the economy rolling. And one of the biggest controls that they have is the monetary policy, or money, how cheap they can make money. So they're not expected to go into the negative rate range. And I got videos on that, and I'll try to find it and link it down below. But that doesn't have anything to do, the Fed does not control mortgage rates. They control what's called the federal funds rate, which is interbank lending. And then a lot of times when they drive that down, then the prime rate and some other things follow that are tied to your credit cards and your home equity loans. So they, just so you guys know, they don't control mortgage rates. Mortgage rates are controlled by the mortgage-backed securities. That's the tool that controls that part of things. So basically, like I said, the recap is when I transferred out of this screen a little bit ago and came back, we went from 14 to 16. It's still moving. Again, my concern is that we something happens and just we hit the resistance, because we should be in this range. I won't keep repeating myself. So that's basically what I just want to get everybody up to date on what's going on, at the Fed level and the economy, and trying to help you determine, is it a good time to refinance or buy? It's a crazy time. Please don't try to time this market to the penny. What I mean by it is, I have a lot of clients that are like, I'm at 5 now, but you're quoting me 2.8, but I really need 2.7. I try my darndest to do that for you, but and I'm not saying this in a rude way. Point one, don't lose out on everything because of, you need 0.1 or 0.05 more. And also, again, don't be completely wowed over the rate. Every day I get rate quotes from people, and the next thing I always say is, well, how much is that costing you? Oh, hold on, let me send that to you. Then I get it, and they're paying $7,000 in fees. I'm like, well, I can do that rate, but it's only going to cost you $2,000. Or if you want to spend $7,000, I can get you a much lower rate. I wouldn't personally do it that way, but we can do it that way if you want. So the best way to reach me, if you'd like my assistance and guidance, and even just to run scenarios past me, give me a call. You can reach me personally at 844-775-LOAN. That's 844-775-5626. Or shoot me an email, and my email is D for Dan, Frio, which is Frio. So dfrio at preferredrate.com, or go to therateupdate.com, and you can fill out one of these if you're looking to buy a house and or refinance. As soon as you're done, I promise you, if it's during work hours, we'll get back with you probably within 15, 20 minutes to pick your brain. And it's not a hard sale, I promise you. We're just going to call up and say, okay, what exactly are you looking to do? What's your goals? And we'll take down that information. Most of the time, if you don't talk to me personally, they'll bring your information to me. I'll structure something that makes the most sense. And I always say this, it's what I would personally do. And it is truly what I would personally do. And we'll get back with you with that. You are the boss. You don't have to do it. You don't have to pull the trigger in a minute or 5 minutes or an hour or a day. We'll just tell you here's what we can or can't do. If you'd like our assistance, just let us know and we'll move further. If not, hey, it was great talking to you. At least, you tried to find out, can you put yourself in a better position? Yes or no. We also have a lot of tools up here that'll help you. And then also down here, you can follow me on any social media. I am all over the board, and I'd love to hear from you, and or at least stay in contact. If you have any questions today, tomorrow, or down the road, I'd love to help. So that's it for now. If you would, I'm trying to do my best to get to 10,000 subscribers by the end of August. So only you can help me with that one. So please don't forget to subscribe down below, hit the bell. And again, if we can be of any help to you, please reach out. Love to help. So God bless. Take care. Have a great day. Be safe. Be healthy. See you soon.